Welcome everybody to the Tax Immigration and Money Transfer webinar. There's quite a lot of us tonight, so welcome everybody and thank you so much for joining us. Our guest speaker today is Rochelle. She's our tax expert. She's going to give us a little talk about tax immigration. If you have got any questions for Rochelle, write them down and then put your hand up when we've finished. I'll do a quick little talk at the when Rochelle's finished, and then we'll do a Q&A after that. So yeah, Rochelle, welcome, and you can go ahead.
So we are looking at tax immigration today. And if you have any questions, like Adele said, maybe just keep them for the end and then we'll address all the questions at once. Okay, so just a short introduction to what we will be looking at. We'll be looking at what is tax immigration, why you should consider tax immigration, what happens when you cease to be a tax resident or go through the tax migration process. How do you declare non-residency? Who must make the declaration? And then lastly, when a declaration will be declined. Okay, so just a quick introduction on myself. I started working in accounting and taxation back in 2016. I then moved over to treasury management and foreign exchange in 2019, and I registered to become a general tax practitioner in 2021. And I've been working in treasury management while I am a tax practitioner and assisting clients with their foreign exchange and tax needs. Okay, so what is tax immigration? I think everybody knows the term tax immigration, but it's actually a layman's term for the cessation of tax residency or a tax residency status change. We often refer to it as TRSC for short. And this is the process of placing your immigration on file with SARS. So financial immigration used to be a term that we used and a process that we used that was facilitated through the South African Reserve Bank. That process has been phased out since 2021 and replaced with this tax immigration process that is facilitated through SARS. This process is actually the process of changing your residency status with SARS from resident to non-resident, which will mean that you are no longer liable for income tax on your worldwide income in South Africa. Okay, why would you want to go through the process of tax immigrating? Firstly, South Africa has a resident-based tax system, and SARS expects anybody who is a resident in South Africa to declare their worldwide income to SARS. So it doesn't matter where you earn your income, you must declare that income to SARS on your annual tax return. Some people prefer to go through the process only to gain access to their retirement policies. So if you are out of the country for 3 years and your non-residency has been placed on file with SARS for 3 consecutive years, you will qualify to gain early access to your retirement policies. The other reason why people would consider tax immigrating is to get rid of the administrative burden you have of submitting your tax return in South Africa, declaring your worldwide income. So I'll explain more in the next slide why this is such an administrative burden. But basically, your worldwide income submission to SARS is not as easy as just submitting South African sourced income. So let's look more into that. I'm sure everybody has heard about the 183 60-day rule, but there is a common misinterpretation of this rule. So basically, what this section in the Act says is that you must be in employment outside of South Africa for 183 days, 60 of those days being consecutive days, in order for you to qualify for an exemption of your foreign remuneration up to 1.2 million, 1.25 million. So a lot of people think that if you earn below 1.25 million, that you are automatically exempt to pay tax on that income in South Africa, which is not the case. Especially if you read more into this section of the Act, you'll see that it is actually way more complicated than just taking the first 1.25 million and writing that off. Okay, so how does it actually work? So when you do your tax return and you declare your foreign income to SARS, you must go and look at the total work days that you were out of the country, the total days you actually worked, in other words, public holidays and weekends excluded. You will take your work days outside of the Republic, divide that by the total work days for the period, and multiply that by the foreign remuneration that you received for that period. And that will be your portion that will be exempt for tax in South Africa. So in other words, you can earn only 1.25 million offshore, but you might not be able to claim the full exemption of that 1.25. You might only be able to claim, say, 900,000 of that 1.25. So that is a major reason why people would consider tax immigrating, to get rid of this administrative burden of calculating this and submitting this to SARS, and then also the tax implication that could go along with that. Okay, so what happens when you cease to be a tax resident? Firstly, you will only be taxed on your SA-sourced income. Once you have ceased your tax residency in South Africa, you will not be taxed on your worldwide income any longer, and you will also not have to declare that income to SARS. So you will only declare the income that you've earned in South Africa to SARS on your annual tax return, if it is applicable, if you still earn an income from South Africa. The other thing that will happen when you cease your tax residency is that you will pay a deemed capital gains tax. So this is referred to as exit tax. And what it basically means is that SARS looks at your worldwide assets on the day that you departed from South Africa, and they do a deemed capital gains calculation. So you are deemed to sell your worldwide assets on the day that you departed and repurchase them at market value. So the implication of that will be that you will be paying, most likely, capital gains on the assets that you have. The good news is that a lot of assets that people generally have when they leave the country are not capital assets, so they don't qualify for the deemed capital gains tax. And also, immovable property in South Africa is automatically excluded. So when we look at your personal circumstances, we can establish, will there be exit tax payable or not? And you can then decide if you would like to proceed with this process or not. Okay, how do you declare non-residency? We do this via your e-filing profile. and we submit a declaration to SARS along with a motivational letter and the supporting documents for the facts stated in the motivational letter. Who must make the declaration and when? As I said earlier, you do this via your e-filing profile, so it stays the responsibility of the individual to make the declaration to SARS. You can, however, appoint a representative that can be, say, for instance, a tax practitioner to make the declaration on your behalf. And this generally takes about 21 days to finalize, depending on SARS turnaround times. So once that declaration is submitted, you can expect to receive an outcome within, say, 21 working days to about 2 months. Okay, when must you make the declaration? So the general time frame to make this declaration is 21 working days. So 21 working days from when you left the country, you should be informing SARS that you have changed your tax residency. However, we can still backdate this day to the day that you left South Africa permanently. So if you missed the 21 working days, it's not a train smash. We can still go back on your travel diary and we can backdate that to the day that you actually left from South Africa. Okay, when will a declaration be declined? So it doesn't happen often that a declaration gets declined, but it may happen if you don't meet the criteria for ceasing to be a tax resident. That might mean that you still see South Africa as your home. So if you are going on holiday, you come home to South Africa. Most of the cases, or most of the clients that go through this process don't see South Africa as their home. So they will automatically then qualify to go through this process. Your application can also be declined if you are unable to provide SARS with the relevant materials that they are looking for, or maybe if your case is queried and you can't provide them with the documentation that they require. This might be like, for instance, an exit stamp if you left the country more than 20 odd years ago and you can't get access to that passport. SARS can decline your application if you can't provide them with your exit stamp. Okay, so that is a quick overview on the process. If you have any specific queries that will be specific to your case, please refer them to the admin@wbforex.com email box and use the subject TE webinar, and we can then review your circumstances and give you specific advice. If you have general queries, you are more than welcome to ask them now.
So with money transfers with WBForex, we set up a Capitec Forex account for you where you can transfer your money into the account, and then once the funds are in the account, we transfer it out into your nominated offshore bank account, which is either in the UK, America, anywhere in the world, to permitted countries. It's a bank-to-bank transfer. So literally, the bank account that we set up for you is in your name. It's a Capitec bank account. And once the funds are in there, your trader will then give you a rate when you want to transfer your funds out into your offshore account. And when you're happy with the rate, you just confirm that on email. To protect our clients, we do prefer that everything is done on email so that there's always a paper trail. And you always know where your money is and what's happening with your. So the bank-to-bank literally refers to your Capitec account to your nominated offshore bank account, which is in your name. So the bank transfer fee is only 250 Rand per transfer, irrespective of the amount. So whether you transfer 250,000 Rand or you transfer 10 million Rand, it's 250 Rand per transfer every time. Our service is free. We don't charge you anything. And then in the UK, your receiving bank will charge you a receiving fee of between 12 to 20 pounds. It just depends which bank you bank with. But you can always ask them or find out from them what that amount is, but it's usually between 12 to 20 pounds. We do try our very best to give our clients best exchange rate, better than what most, say, commercial banks can offer. You can leave the money in your Capitec account for as long as you like. It will earn interest. At the moment, it's 7% per annum. And when you're ready to have the funds transferred, you can transfer it. Once you've spoken to the trader, you can transfer it out. There's no admin amount. There's no admin running management fee that you pay. And then that's basically the whole setup for the bank account that we open for you and how we work with that. Every South African from the age of 18 is allowed to transfer 1 million rand out of the country without the need of a SARS clearance. If you have more than that you want to transfer out of the country, once you've used your 1 million, or you don't have to use your 1 million STA, you can include it in your foreign investment allowance of 10 million rand, which is what we call the AIT, it's an application for international transfers, and that can be up to 10 million rand. Now, we can assist with the AIT application. The STA is per year, so that is from January. Every January, 1st of January, it gets reset. So every year you are allowed to transfer up to 1 million rand out of your bank account and out of the country. The AIT is for up to 10 million. You can apply for more than one AIT, and the AIT is valid for 1 year from date of issue. And that's basically, in a nutshell, what we offer. We do offer other services, like tax immigration is one of them. And that's about it. If you have any questions for Richelle or for myself, just put your name up, your hand up, and we will try and get to everybody as soon as possible. Like I said in the beginning, but for those that came later on, please, if you could just keep the questions to 2 questions maximum per person, just so that we can get through everybody. If there is more time at the end and people still have questions, we can then carry on. So our first question is from Diane Grayson. Yeah, you can go on, Diane.
Okay, thanks. So I'm a bit confused about the retirement bit. So I'm 67. I have 2 provident funds, one from my former university and one from Ellen Gray. I was already over 55 when the ruling came in that you couldn't take it all out. So I'm still allowed to take it all out. I don't have to have a retirement policy. But I don't understand why I can't just take that money out and bring it across as an AIT. Would I still have to wait the 3 years, and why?
So that mainly depends on your policy rules. So if your policy states that you can still take those funds out as a lump sum, you may do that. But a lot of policies have a rule in place where you have to buy a living annuity with those funds. So you can't necessarily take the entire amount as a lump sum. In that case, if you choose to do the living annuity, that policy will pay out a monthly pension into your account, and you can still remit that monthly pension via your STA or your AIT. However, if we do the process, the tax residency process, and we do an AIT for for immigrant purposes, then you will be able to withdraw the entire lump sum and take that out as a whole without being forced to buy the living annuity. I hope that makes sense.
Yeah, thanks. So it sounds like I can just take it out and transfer it as part of an AIT.
Yes, it just depends on the rules. So you can inquire with your assurer. If they say that you can withdraw the entire amount as a lump sum, you might be able to use your STA or your AIT without going through the tax immigration process.
Thanks, Diane. Thanks, Rochelle. Lisa, you put your hand up. Stephen, you next, and Leslie after that.
Hi, I just want to find something out. So I actually came over to the UK in May 2023 and I worked here for 5 months. Then I went back to South Africa and literally packed up, sold all my stuff and sold off my house and everything. And then we actually immigrated properly in April this year. So with regards to the tax immigration, have I been here for a year or have I only been here for 6 months? I don't know.
So that depends on your view on it. So if you left the country in the first place, saying that you are not returning to South Africa permanently, we can use the first date that you left as your cease to be resident date, and we will have the passport stamps and the motivation to prove that. So you can motivate to SARS that you only came back to South Africa to sell all your assets with the intention of going back to the UK. So as long as you can motivate your circumstances, you can use that first date.
I'd prefer to use the second date, to be honest.
Yes, you can definitely use the
Okay.
second date.
Okay.
Like I said, as long as you can motivate it, SARS will never say no to use the later date. So
Okay.
yeah, they will prompt to use the later date.
Uh,
But you
And
would
it's
like,
fine that it's 6 months ago because you said you can backdate it, correct?
yes,
Okay.
yes, you can
Because
backdate.
I sold my house and I haven't brought that money across yet. It's still in South Africa and I need to bring that across.
So you have two options when it comes to that. You can either use your allowances, your resident allowances, to take that money across, which is a quicker process. So if you haven't used your allowance for this year, I would suggest using that allowance to do the 1 million and then maybe applying for an AIT to do the rest, and then you go through the tax resident process. Because the tax resident process can be lengthy, so you don't want to sit on those funds for too long.
Yes. Okay. Yeah, because we've already brought in about 800. So yeah, that's the thing.
Yeah, so you do have the option to apply for an AIT,
Okay. Okay.
but I mean, we are already in November, so
Yes.
yeah, you will have the option to use your SCA again in January if you don't want to sit on those funds for too long.
Okay. All right. Okay. Thank you.
Lisa, you can send me an email at adele@wbforex.com and I can discuss it with you further if you want to.
Okay, lovely. I'll do that. Thank you.
Okay, brilliant. Thank you.
Thanks.
Stephen, you're up next.
Thanks very much. I have just two questions. The first is if you earn no South African income after becoming non-resident, do you still need to submit a personal income tax return to SARS?
No, you don't have to. If SARS picks something up that might prompt them to prompt you to submit a return, they might ask you to submit that. That can include anything like an interest that was earned during the year. Even if it's a very low amount and it's below the threshold, they might prompt you to submit because they might think that you have more assets in South Africa. So it's always difficult to say, but if you are certain that you have nothing left, no assets, no funds, nothing left in South Africa, they shouldn't prompt you to submit a return.
Great, thank you. Then my second question is, I'm immigrating in 1 month's time. I'm just currently still in South Africa, leaving for the UK. Is there a part of the tax immigration process that has to be started ahead of time, or any documentation that needs to be sort of sought or requested before leaving the country, or is it a timeline that can start within that 21 days post departure?
Yeah, I would suggest that we start post departure because we will need that exit stamp as proof to SARS that you have left. So if you would like to be proactive and just see what it's all about, maybe get the quotations from Adele and so forth, we can definitely start that process. But in terms of the actual submission, we will have to wait until you have departed from South Africa.
Great, thank you.
Thank you, Stephen. Lisa, you still got your hand up. I assume that you've forgotten to put it down. Sorry. Because I keep looking and thinking maybe you've got another question. Leslie, you can go ahead.
Hi, good evening. Sorry, I was just trying to unmute myself. So also a two-part question. So the first one is, I have a lump sum of money remaining. Sorry, I immigrated to the UK in December last year. I have a lump sum of money remaining in a bank account to support family. My mother unfortunately can't immigrate out. Are you able to tax immigrate if you have a fair amount of money still remaining within the country, or do you have to remove your assets, including your cash?
No, you don't have to remove your assets from South Africa. You have the option to. But if you want to keep that bank account open in South Africa, you are more than welcome to do that.
Yeah. Would you just have to submit a annual SARS return because you're earning obviously interest on the income?
Yes, but the good thing about going through this process, if you are earning a lot of interest in South Africa, is that you can claim an exemption for that interest, because it will most likely be taxed in the UK as well. So there is that option as well, but you're more than welcome to send us an email if you would like assistance with that tax submission to claim that rebate as well.
Okay, all right, thanks. And then part two would be, I would love early access to my retirement policy. Is the only way to gain the access within the 3 years to tax immigrate?
Yes, unfortunately, because if you retire from a fund, they will prompt you to buy a living annuity, especially if it's above the thresholds where you can still withdraw that without buying a living annuity. So once you've taken the option to buy a living annuity, those funds are set in South Africa. You will not be able to ever transfer those funds out unless it comes down to, I think the threshold is now 125 Rand, 125,000 Rand, then you can do a lump sum. But I mean, if you have a living annuity of say 10 million Rand, those funds are stuck in South Africa if you retire from that fund.
Even if you're under the retirement age. So I'm in my 40s.
Yeah, they won't allow you because most funds have a retirement age of 55.
Yeah. So I'd have to tax immigrate, wait for the 3 years to be up, and then I'll be able to withdraw the funds.
Correct, yes.
With a 40% tax.
Yeah, unfortunately.
Okay,
you have to
all right.
price for that, yes.
Okay, fantastic. That answers it. Thank you so much.
Thank you, Leslie. Mark, you're up next.
Hi, yes, can you hear me?
Yes.
Yep.
Good evening, everyone. Yeah, my question's directed towards Rochelle on this tax issue. I have a son that moved over there in September of 21. And you know what these kids are like? They leave and let mom and dad fix up all the admin mess they leave behind. So is he still able to tax immigrate from that date?
Yes.
backdated that far? You can still backdate it as far as that, right?
We can, and we just motivate that in the letter to SARS, and we use the exit stamp as proof.
Okay, and so if I had to get him to contact you to do his tax immigration, you would do the entire tax immigration then in terms of letting SARS know and getting him listed on there, according to them, as a non-resident.
Yes, correct.
Okay, all right. And then just concerning me, I'm still in South Africa, but obviously looking to move over in the next couple of months once I've got some visas sorted out. And that is on the finance side. So I have quite a large cash reserve here in South Africa, which I don't intend bringing across straight away. It's obviously earning interest in a bank account here, a money market account. In order to support myself over there, or I call it pocket money over there, I plan on transferring the interest in my annual amount as an international transfer. Would that still be subject? Obviously, I've got to pay tax on the interest earned here in South Africa. I haven't even tax immigrated yet, so I'll pay the interest here in South Africa, at least the tax on the interest earned here in South Africa. Will I still be subject to pay that a tax in the UK?
Well, that depends on your tax residency status in the UK. So I would suggest speaking to a tax practitioner in the UK, because I'm not familiar with the UK laws regarding the double taxation of the interest. So I would suggest contacting somebody in the UK to sort that out for you. But in regards to the transfer that you were asking about, so once you declare non-residency to SARS, you no longer have the resident allowances. So the 1 million that Adele spoke about and the 10 million that you can do on AIT, that falls away once you become a non-resident. And what happens then is all your funds that flow through your account are subject to exchange control. So depending on the source of the funds, you will need an AIT tax clearance to move those funds abroad. So what we do as part of this tax immigration process, we apply for an AIT for all your assets in South Africa so that you have 12 months to use that AIT to transfer those funds abroad. If you don't use it within the 12 months, it's not an issue. We just have to reapply once that AIT has expired, and you can then have another 12 months to transfer those funds abroad. If you are looking to do monthly transfers, depending on the source of funds, we might be able to get exchange control approval for you to do that on a good standing certificate. But that will depend on your specific circumstances and your specific source of funds.
But that's only if I've tax immigrated. I mean, if I come across there next month, I haven't tax immigrated yet. Look, the idea is to have some sort of funds over there until I find a job. So it'll be kind of 3 or 4 months. Once I've established that, then I'll tax immigrate. But before I tax immigrate, the plan is just to move it through my standard bank shipped account onto my foreign credit card and use that as funds in the UK initially. But I won't be tax immigrating. And my concern is that if I've got a South African virtual, or I've got a physical credit card as well that I can use Forex on, you raised the issue just now, you could be subject to tax of that in the UK and tax here in South Africa.
Yeah, definitely in South Africa on the interest that is earned.
Yeah.
But in the UK, you're going to have to, maybe Adele can give you a contact for somebody in the UK that can assist with the tax on that side.
Okay, all right. And then just lastly, in terms of tax immigration, you talk about the exit tax, your worldwide assets. Obviously, I only have assets here in South Africa in terms of policies and cash on hand, and I have one property. What would the exit tax, what would be considered as worldwide assets in my case? I don't have shares in any companies. I have cryptocurrency, but and I have policies, and I have cash, and I have one small property.
So the only asset that you mentioned now that will be subject to exit tax is the crypto assets. The policies are not seen as a capital asset. The cash also not seen as a capital asset, and the property is automatically exempt from exit tax. So we will just have to look at your cryptocurrency to establish if there will be any exit tax payable on that.
Is there a threshold for exit tax on the crypto or the value of the crypto?
It works in the same manner as your capital gains tax.
Okay.
So there is a 40,000 Rand exclusion, and that gets added to your annual income. So it's taxed on your annual income with the 40,000 Rand exclusion.
Well, that's quite complicated.
Yeah.
If you have it as an asset, but it hasn't increased in any value, there's no capital gain on that. So
Yeah, I mean, if you didn't have a gain on those crypto assets, there won't be any exit tax applicable because it's only applicable to gains. If there's a loss on that asset, you won't be paying any exit tax.
maybe they'll pay me.
Wishful thinking.
Okay, so if I bought for 100 Rand and I leave and it's still worth 100 Rand, when I tax emigrate, then I won't pay any capital gains. But obviously, if it's worth 200 Rand, I'll pay capital gains on the extra, on the 100 Rand appreciation of it.
Yes.
Okay, all right, fine.
Yes.
Thank you.
Thank you, Mark. Leslie, you've been waiting. You up next.
I went previously, unless there's another Leslie.
Sorry, Lindy. Sorry. Sorry, Leslie. It's Lindy's iPhone. Sorry.
Yeah. Sorry. Hello. Thank you very much. I just have a question. It might be a bit ambiguous, but is there any good reason to not tax emigrate, to just stay, to keep your tax residency? Just for context, I've been in the UK for 6 years, and I need to do this, so I know I need to backdate it. But I don't have any more assets in South Africa. I have a bank account, but with very little money in it. Don't intend to go back. Don't have any policies or anything. But I just wanted to know if there's any good reason to not do it. Is there like something to be aware of, that if you do it, you won't be able to do something else or something? I don't know if it's possible.
The main reason why I would suggest not doing it is if you had a lot of capital assets on the day you departed. So that will mean that your exit tax will be very high, and that will defeat the purpose of not declaring your worldwide income to SARS if you have to pay, say, for instance, 500,000 Rand exit tax, but you're only declaring worldwide income and you're not paying in on that worldwide income, or you're only paying like 20,000 Rand in on that worldwide income. So I think that would depend on your specific circumstances, but we have only had one client in the past 3 years of doing this new process that actually had a lot of exit tax to pay, and that's only because the client had shares. So if you had capital assets, let's look at that first, and then we can assess your exit tax or your deemed capital gain, and then we can advise on that further. But other than that, I can't think of one reason why not to do it if you're not planning on coming back to South Africa.
Okay, thank you very much.
Thank you, Lindy. Anne, Grayson, you up next?
Yeah, so I wanted to just follow up something that Rochelle said earlier about if you have a savings account in South Africa and you're earning interest and you've tax emigrated, that you might also have to pay tax in the UK. So I'm not sure how that works. And part of the question, I guess, is if you have tax emigrated, if you are earning income in South Africa, would you be taxed in the UK or only in South Africa?
So if you tax immigrate from South Africa, we prove to SARS that you are a tax resident in the UK and you only want to be seen as a tax resident in the UK. So if you have any South African income on a regular basis, so for instance, the interest, I would suggest going to a tax practitioner in the UK and consulting with them on how the South African portion of that must be declared in your UK tax return, because that is something I don't have knowledge on. So I'm not sure about the UK aspect, but in terms of submitting that declaration or that annual return to SARS, you can claim the rebate for the interest in South Africa. So you will not be paying interest, or you will not be paying tax on the interest earned in South Africa if you declare non-residency.
Thanks, Diane. CS, I don't know what your real name is. I just see you as CS. Just before you start, if anybody has got any questions that they would like to ask, but they just might be a bit shy to talk on here, you're more than welcome to email us at either admin@WBForex or adele@WBForex.com. And Rochelle, I can forward it to Rochelle if it's tax immigrated related, if it's money transfers related, I can deal with it. TS, you can go ahead.
Thanks, Adele. It's actually Colin. And thank you guys for having the session. So my question is around the exit tax. And you just mentioned that cash is not included in the calculation of the assets. So I think property is. And my actual question was, preservation funds and RA, are they included in that calculation?
No, they are not, because you will be paying tax on the income when they pay out. They are not seen as a capital asset.
So would it be beneficial? I've got a preservation fund that I can actually cash out right now. So I could do that and have it in cash. And the same, if I haven't left yet, if I sell the property before I leave, and it's my primary residence, then I could save a lot on the exit tax, right?
Well, the primary residence in South Africa will not be subject to exit tax. So you can keep that property. You don't have to worry about the exit tax on that property. And once you sell it, there might still be ways to claim that primary rebate. So depending on the circumstances.
It's not my primary residence anymore.
Yes, so there are some loopholes that we can look into. It's not necessarily saying that you won't be able to claim that primary resident rebate. You might still be able to. It just depends on when the property is sold, when you bought the property in the UK, if you bought a property in the UK, and if you kept this property, never rented it out. So depending on all the circumstances regarding the property, you might still be able to claim that primary resident rebate.
Yeah, well, thanks. So in terms of my preservation funds, there's no difference between cashing them out now and taking the money, and there's no 3 year to wait. I'm still going to pay the withdrawal tax either way.
Yes.
Okay.
If you can access them now.
Yes, I actually can. Okay, thank you.
Thank you, Colin. Michelle, you're up next.
Hi, can you hear me?
Yeah.
Hi, great. So I've got two questions. Well, the one's more just to understand. So you cease to be tax resident for 21 days from leaving, but it takes 3 years to financially immigrate. So therefore, for those 3 years, you still got to do your tax returns, declaring both South Africa and UK income. Just want to make sure.
It doesn't necessarily take 3 years to tax immigrate, but you have to be a non-resident for 3 years to gain access to your retirement products. So
okay, so I still have to do my tax returns then? Like, how long would I have to do tax returns from there since leaving?
Well, you will always be obligated to submit a South African tax return if you receive South African sourced income. So if you declare non-residency, for instance, within that 21 working days after you have left, that becomes effective immediately. So you will, since the day that SARS approves that application, you will be seen as a non-resident. And from there on, you will only submit your tax returns as a non-resident. I hope that makes sense.
Okay.
So if you're a non-resident, you will only declare your SA sourced income. If you remain a resident, you will declare your worldwide income.
Okay, so you can become a non-resident like almost straight away.
Yes.
Okay. So I was understanding that was a 3-year period to become a non-resident. So I'll be waiting that 3 year to get my RA, but my husband will be having he had to buy a living annuity, so he will have monthly income coming in. So from what I understand, he shouldn't tax immigrate because then he's going to have that issue of transferring the money every month that he gets from his RA and having to have these ARTs and all that.
No, so for a living annuity income, we can get exchange control approval to do that based solely on a good standing certificate. And a good standing certificate is very, very easy to apply for on e-filing. It gets issued within, say, 30 minutes. So to keep that up is not an hassle. He can still go through this process and still remit his monthly income. We just have to get the exchange control approvals in place.
Okay, and is that like a yearly thing, the exchange control approvals, or is it a once-off thing?
So the exchange control approvals happens each time that the account receives funds. We get notified by Excon, and they then ask us what the source of funds is. We just tell them the source of funds is living annuity, attach the good standing, and they give the approval. So it's not something that is dragged out for weeks. It's like handled within a day or two.
Okay. And I've also heard once you do tax immigrate, you can't have your normal South African bank account. You've actually got to get I can't remember what they're called, non-resident bank account. Is that true?
Yes, that's correct. Because the funds are subject to exchange control, that's just a way for the banks to mitigate their risk, to make sure that they follow the correct procedures when it comes to the immigrants.
Okay, perfect. Thank you so much.
Thanks, Michelle. Paul, you can go ahead.
Hi. As part of the tax residency, the cessation documents, will SARS not ask for something from HMRC to prove that you're tax resident in the UK now as part of that cessation process?
Yes, they actually do. So we submit a tax residency certificate that gets issued by the HMRC to SARS with the application.
Is that a particular document number? All I've heard is that you need something from HMRC that proves that you're now in the UK tax net. But is it a particular document?
Yes, they call it a tax residency certificate. And I'm sure Adele can guide you on the process of applying for one, but it is a very specific document that we need from the HMRC.
Okay, thanks.
Yeah, just a quick question. If you tax immigrate and you still got a bank account here, I mean, I've got a standard bank money market account. So if I tax immigrate, do I have to change that bank account with the standard bank
Not
to a non-resident
necessarily.
bank account, or can I just keep the accounts as they are?
Not
leave the money
necessarily,
here?
because that is a money market account. It's not like a transactional account. But what we always suggest is once that letter is issued by SARS, to let your bank know. So you will take that letter, send it to your bank, let them know that you are now non-resident, and each bank has their own set of rules on how they deal with that. So us working with Capitec mainly, Capitec issues new account numbers and the old account gets closed. But that is just for administrative purposes, for them to be hands-on with the immigrant blocked accounts, or the non-resident accounts as they call them. So that depends on your bank, but you can inquire now and ask them how would that be dealt with, and they will be able to provide you with an answer.
Thanks, Mark. Jared, did you still want to ask a question?
Can you hear me now?
Yeah.
I had to reload the page. Sorry about that. My wife and I immigrated in 2019 and subsequently sold our properties in South Africa, and then also bought a property here in the UK last year. So just obviously considering the risk around the exit tax related to the purchase of the property here in the UK a year ago. It's obviously related to capital gains though. So would we need to prove that the property value has remained the same in order to avert the exit tax on the foreign property?
Well, the exit tax is calculated as the day of departure, as on the day of departure. So if you didn't have that UK property on the day that you departed from South Africa, that property will not be taken into account for the exit tax calculation.
Okay, great. That's what I need to hear. Thanks very much, and appreciate you guys doing the session as well.
Thank you so much. I've got users iPad. I don't know. There's no name on there. If you want to go ahead.
Can you hear me? Sorry, Adele.
Yeah.
The name is Dave. Yeah, sorry, it's just picked up the iPad.
No worries. Hi, Dave.
Okay.
You go
Adele.
ahead.
Thanks to you and Rochelle for the session. It's really been very informative. Just two questions. The one is, if you tax emigrate, and it might have been answered already, but we're just not sure. If you tax emigrate and in 7 years' time, say, an RA becomes, it matures and you're able to draw it out, what is the process we'd have to go through to get that funding across? So is there any specific process? Is there anything that we need to be aware of when that time comes?
Yes. So if you are already a non-resident and the time comes for that policy to pay out, you will have to apply for an AIT, tax clearance from SARS. That needs to be sent to the assurer with the withdrawal instruction, and they will only be able to release those funds if the AIT has been approved by SARS. So that is the only thing that you need to take into account. And then also they will also require that HMRC letter that we spoke about earlier when doing that withdrawal.
Sorry, just refresh me about the HMRC letter.
So most assurers request only the letter from the HMRC stating that you are a tax resident in the UK.
Yeah.
And some of them request that you submit your tax returns for the last 3 years. So depending on the assurer, there might be some additional documentation that you need to submit with regards to your tax in the UK. Okay,
thanks, Rochelle. Yeah, that explains it. So back to the RA, I mean, that's RA, that's pension, that's whatever gets encashed after that. We will have to go through that process of AIT.
Yes.
Perfect. Thank you. My second question then is around the actual move. So we've been here for 2 years. With the tour that we're left with, we sent a container of some goods over. We had a tour. The tour asks for market or replacement value, as well as obviously insured value. Will SARS then look at that replacement value and work out exit tax on that? Or will it look at what the contents of the tour were first to determine if any of those contents are not subject to exit tax?
Was it just like personal assets?
It's personal assets. It was a little bit of furniture, 1 or 2 appliances, and then a lot of personal things, books and papers and certain tools and things like that we brought across.
So that will not be subject to exit tax?
Not at all.
Not at all.
Okay. All right. No, I think that answers my question. Thank you very much, Rochelle. Thanks, Adele.
No worries. Thank you very much. Anybody else got a question? You don't have to be shy. Lindy's iPhone, you can go ahead.
Sorry, just a quick follow-up question. If there were later in my life, if I submit this tax immigration, and then later in my life there's some inheritance from South Africa, is that going to be a big pain to then sort? I still have siblings in South Africa, so there'll be residents there, and then I'm here. But just in the odd case that we might have some form of inheritance, is that going to be a pain or?
No, it's not a pain, but we still have to get exchange control approval for that. So for inheritance specifically, we don't need an AIT tax clearance, but we will need all the documents related to that inheritance in order to get the approval from exchange control to remit those funds. But this is documentation that you will already have on hand. This is things like the L&D account, the liquidation and distribution, the estate late account, the will and testament, the deceased ID. So it's basic documentation. It's not like something that you're going to have to go and look for if you receive an inheritance.
Okay, thank you very much.
Great. If anybody's got any more questions, we're going to stick around for about 10 more minutes. We'll ask Mark Palmer to have a chat with us. Mark Palmer is a immigration specialist helping South Africans finding properties to rent. And he also helps with other immigrated related issues like finding a good school. But I'll leave it to Mark to quickly just quickly tell you guys what he does and what he's about. Thank you, Mark, very much for joining us, and you can go ahead.
Thank you for that introduction. Yeah, I help many people find properties to rent. I was an estate agent for 20 years, and I've done corporate relocation for the last 18 years now, where we try to find rented houses for people that are coming over, and mainly deal with South Africans before they arrive to save them Airbnb costs. I met Adele first about 6 years ago now, I think, wasn't it, with your relatives, helping find properties, and kept in contact ever since. So I just really leverage my relationships with the estate agents, because as we all know, estate agents all around the world are very difficult to deal with, very hard, and it's super competitive. So if anybody's got any queries or any questions at all, happy to just try and reach out. Adele's got my details. You can go through Adele and ask me any questions you like. Happy to try and help you. I don't want to steal your thunder tonight, Rochelle or Adele, but appreciate the introduction.
No worries. Thanks, Mark. Yeah, I've known Mark for many years, and he's kindly come on here tonight to support me. I can always count on his support. Thanks, Mark. Tracy Andrews, you've got a question. I don't know who you want to direct your question at, but you can go ahead.
Hi, Del. I want it for Rochelle, please.
No worries.
Rochelle, we planning to leave by end of January next year. I want to know how it will affect me if I'm working for a company in South Africa, in the UK. Do I do the non-residency as well for the tax for SARS, or do I leave it until I stop working for the SA company?
Yeah, that's a difficult one. I would suggest keeping your tax residency in place for now, while you're working for the SA company. So while you're earning an income here, because it won't benefit you in any way to do the tax residency now. You will still be issued with an IRP5, you will still be taxed in South Africa on that income. So going through this process now will not benefit you in any way. And while you're earning the income in South Africa, you can use your resident allowances to remit those funds abroad.
Okay, thank you. So only once I stop working for the South African company, then I do a non-residency on SARS. Okay.
Yes.
Thank you so much. Thank you.
Thanks, Tracy. Again, if anybody's got questions and you don't want to speak on here, if you're shy or for any reason, you're welcome to email us, either myself, Adele at WBForex.com, or admin at WBForex.com. We're quite happy to help you. Rochelle will be more than happy to answer your questions and guide you through the tax immigration process. Mark, you've got a question?
Yeah, I think you just answered it. Rochelle, to contact you via email is via the admin email address, eh?
Yes, you can send it to the admin email address, and Adele will revert any queries tax related to me.
Are you based in South Africa or the UK?
No, I'm based in South Africa.
Thank you, Mark. Colin, you've got a question?
Yes, thanks for letting me speak again. It's another tax question, specifically about the threshold, about the 1.2 million. So if you're earning as a South African, haven't immigrated there, but haven't done the tax immigration, and you earn over that threshold, are you effectively being taxed by the UK and then again by South Africa? Is that?
Yes.
I heard something about a double taxation agreement.
There is a double taxation agreement in place, but since 2021, that agreement or that arrangement between the UK and South Africa has been capped to 1.25 million on the South African side.
So you can't even claim from the UK side to say, I've also paid it on South Africa side, nothing, it's just money gone.
Yes.
Okay, that's that.
Yeah, that is the main reason why people prefer to go through this process, especially if you are earning more than 1.25 million. And especially if you're traveling a lot, because then that amount gets apportionated. So you need to look at your working days that you spent in the UK and the total working days for the period, to make sure that even if you earn below the 1.25, that the entire amount is eligible for that deduction.
Okay.
Yeah.
Thanks.
Thank you, Colin. So yeah, I think we're going to wrap up soon. Thank you very much, Rochelle, for I think Mark's got another question. Sorry, Mark.
Yes, me again. Sorry, Rochelle, I actually lost you. My internet connection's not the greatest here. Just concerning the income of over 1.25 million. Can you just repeat what you said there? You mean you're subject to double taxation on anything over 1.25 million or on the 1.25 million as well?
Anything over the 1.25 million, but keeping in mind that the entire 1.25 million might not qualify for the exemption. So you first need to go look at the portion that qualifies for that exemption, but anything above 1.25 million will definitely be double taxed in South Africa and in the UK.
Okay. So, I mean, I'm just thinking about my kids over there, they were earning, say, 1.4 million, but they're permanently over there. They've never been back to South Africa. They don't even travel anything. So it's permanently a full year in the UK. And if they were earning, say, 1.4 million, SARS could still tax them on the 200,000 over there, even though they paid the tax in the UK.
Yes, correct.
They'll be contacting you shortly.
Glad to assist.
Thank you.
Mark. Thank you, Mark. Yeah, so if you guys would like to have for us to have host another webinar regarding tax immigration or immigrated related topics, please do message me on Facebook, Adele Walker, or send me an email. Any feedback will be great. This is our second webinar that we've done, and we've had a really good response. I know tax immigration is a subject that's always discussed on social media, on my immigration group as well, and my visa group. So yeah, if you guys are interested in having another one or any other topics that you'd like us to discuss or have speakers on, please do let me know. We're quite excited about doing all these webinars. Thank you, Rochelle, very much for doing this. I think it was very informative. We can only do the last two questions because then we have to go. Sorry. Users, Dave, I think.
Sorry, yes, Dave. Sorry, Adele. Yeah. Sorry, I know you want to close off. I just wanted a quick question while we're discussing that topic. So I just want to understand the question that Mark asked. 1.4 million, the 1.2 is whatever. So the 200,000, what is the rate that South Africa would then tax that at?
That would be at normal income tax brackets. So anything earned above will fall into your income tax bracket, and that will determine the rates that you are taxed on.
But what I'm asking, sorry, so will it be the 200,000 Rand standard income tax bracket, or the earnings in total, and that's the amount over that will then be taxed? So it'll probably be a 40% tax rate.
No, it works on the amount over the 1.25 because the first 1.25 is exempt.
Okay.
Yeah.
So if it was 200,000, it would be as though you're only earning 200,000 in South Africa, and you'd pay a tax rate according to that.
Yes.
Brilliant.
Correct.
Thank you so much. Thank you very much.
Thank you. Thanks, Ingrid.
Hi there. Thank you for letting me speak quickly. I joined late because I got back from work late. Is this recording going to be available so that I can hear the beginning part?
Yes, I can make it available for you. Send me an email to remind me that you want to have a recording of this, and I can get the marketing team to sort it out for you.
Thank you so much. I really appreciate it.
No worries. Thank you. Yeah, so that's about it. Thanks, Rochelle, very much. I really appreciate it. I think we might do another one maybe in the new year with you. It seems like a lot of people are interested in this subject, and it is a minefield of a topic to discuss. There's so many questions. I hope that we've answered everybody's questions, and thank you, Dave, for the clapping of your hands. Yeah, so that's about it. Thank you, Mark, for your little 5-minute thing. And yeah, like I said, if anybody's interested in any more topics that we can discuss for immigration related, please do let me know either via email, adele@wbforex.com, or on Facebook. You can private message me. I am always available everywhere on Facebook 24/7. Thank you, Rochelle. Thank you, Mark. And thank you, everybody that joined us tonight. It was really fun, and I hope you enjoyed it.